One day, do you hope to be worth millions of dollars, tens of millions of dollars, even potentially hundreds of millions of dollars? Well, if you're watching this today and you fall into the camp of wanting to get there one day, or maybe you're already there, what we're going to do today is we're going to demystify and we're going to simplify some of the most advanced estate planning techniques that you see out there in the landscape today. My name is Luke Turner, co-founder of Moment Private Wealth, where we help athletes and entrepreneurs get smarter with their money. Let's dive in. All right. So like I said in our intro, what we're going to be talking about today is really some of these more advanced estate planning concepts. But before we actually talk about some of the concepts, one thing that I think would be really helpful is to dive into some of the basic frameworks and ideas around estate planning. So what we're looking at today is we're going to break down the balance sheet of somebody that has over $100 million net worth. We're going to look at what that estate tax issue could look like. We're going to look at some of the common things that we want to identify when we are trying to build out an estate strategy. So first, let's just look at the balance sheet or net worth that we have up here on the screen. So this is very common in what we see. If we look at somebody that has $100 million plus net worth, they have about 50% of these dollars in cash and equivalents. You can see that listed there at $55,500,000. We have marketable securities at just under $3 million. We have a nice, healthy real estate portfolio at about $10 million. We have our retirement assets. These are going to be our 401ks, our IRAs, our Roth IRAs at just under $4 million. And then we have entities at $45 million. Think about entities as business assets. So these are going to be either operating businesses that we own, or they're going to be other investments that we've made that are in private investments that are not in our marketable securities or our cash bucket. So that's the balance sheet that we're looking at. And when we look at this type of balance sheet and we start to look at some of the issues that come up with estate planning, the first thing that we want to look at is, one, what is inside of our estate versus outside of our estate. So in this example, if we look down here, we can see that we have a taxable estate of $117 million. Inside the estate, we have $102 million, and outside the estate, we have $15 million. So this first concept we want to look at is looking at assets and saying, what is inside your estate and what is outside of your estate? And why are those important? So things that are inside of your estate are going to be assets that are going to be taxable to your estate. So specifically in this example, the things that are inside of our estate are going to be all the items that we have outlined up here. The things that are going to be outside of our estate in this example are going to be either irrevocable trusts, or they potentially could be life insurance policies. In this example, they were life insurance policies that are outside of our estate. The important thing to note is that when you hear the term inside of your estate or outside of your estate, anything inside of your estate is going to be subject to estate taxes, both at the federal level and the state level. And anything that's outside of your state is going to be completely outside of your state from a tax perspective. So whenever you hear that terminology, know that outside of your state means that you are going to be avoiding estate taxes on those dollars. The next main bucket that we're looking at, bucket number 2, is going to be liquidity. So when we are trying to build out an estate planning strategy, we are always going to be looking to identify what are the assets that we own that are liquid, what are the assets that we're going to own that are illiquid. So in this case, you can see down here, we have our liquid assets in dark green, and then we have our illiquid assets down here in light green. And the reason why this is very important to look at is when we look at a estate planning strategy, we need to know how much liquidity we have available to pay estate taxes today. One of the biggest problems that we see families run into is they never think anything's going to happen to them until one day something does happen. And if they don't have the liquidity to pay the estate taxes that are owed, what ends up happening is they have to fire sale something that's an illiquid asset. So an example of an illiquid asset would be a business entity, an operating business, maybe a family business, potentially real estate, things that are not easily bought or sold. So if I were to tell you to go buy a A-class building that you own, it would be much more difficult to go sell that tomorrow than it would be to go out and sell your Apple stock, because there is not a market to go buy or sell that building in a very quick and efficient manner. So we want to make sure that we understand, okay, how much liquidity do we have and then specifically how much liquidity we have as it relates to estate taxes. And that's our third bucket we have over here, where when we look at this, the biggest thing we're going to be looking to identify is, one, what is our total estate tax that we're going to owe? And then two, what does our exemption look like from a family perspective? So just to recap, what is our lifetime exemption? So when you are born into the United States of America, you are born with the lifetime exemption. Today, that number is $13,610,000, and that's as of 2024. Meaning that if you have less than $13,610,000 in total net worth, so if you add up all your assets, subtract all your liabilities, whatever that number is left, if it's less than that $13 million figure I just talked about, you are not going to owe any estate taxes. So you can just throw this out the window because it's not something that's going to be applicable. If you have over that number, you now have what's called a taxable estate. And we need to make sure that we are identifying what that taxable estate looks like. So in this example right now, our estimated total tax that we would owe if this family were to pass away today would be approximately $42 million in federal taxes and state taxes. One thing that a lot of people forget about is that when we're looking at estate taxes, there's actually two levels of estate tax we need to look at. There's going to be a state imposed estate tax, and then there's going to be a federally imposed estate tax. And depending on what state you live in, you may or may not owe state estate taxes, but everyone is going to owe those federal estate taxes. So when we look at families, again, we're going to really start by breaking things down into three distinct buckets. One, what is our total net worth and what is inside of our estate versus outside our estate? Second is how much liquidity we have. So when we actually look at that balance sheet, what assets are liquid assets, what assets are illiquid assets. And then third, we are going to do an analysis to say, okay, based on where you're at today, how much do we anticipate we would owe in estate taxes, both at the federal level and at the state level? Once we have an idea of those three buckets, we then can determine what are some strategies that we need to implement in order to reduce that. So if you have a net worth that's over that $13 million number, or you anticipate you're going to have that over that number in the future from a net worth perspective, I would highly encourage you to start thinking about some estate planning strategies that can reduce that. The great thing about estate planning is that if you do it right and you do it in advance, there are many ways where we can take an estate tax number and we can reduce it or even eliminate it. So if you have any questions around estate planning, estate taxes, feel free to reach out in the comments below, schedule a meeting with me, and I'm happy to walk through any questions that you have. Hope you have a great day.